Coming up in this episode, we'll be taking a look at the latest consumer price inflation numbers, we'll be taking a look at the latest base rate decision, and we'll be taking a look at the latest land registry figures, alongside looking at the latest lender rate changes, the latest criteria changes, and the latest swap rate chart. Hello everybody, and welcome to the latest UK mortgage market insights for the week ending 22nd of March 2024. I hope I find you all well. If you'd like to show your support in this channel, it would be appreciated, and you can do that by giving this episode a thumbs up and also by subscribing to the channel. So the biggest news that we saw this week was the Bank of England base rate decision yesterday. The Monetary Policy Committee met and decided to keep interest rates on hold at 5.25%. Now before I get into the facts, I'd just like you to take a look at the screen behind me, and this is where you can find all the information relating to the Bank of England and the monetary policy. It answers common questions like what is monetary policy, how we decide what action to take, etc. So if you want to go take a look at this, then there will be a link below. But if you want to have a look at the news relating to the decision, you go up to the top here, news and publications, to news and minutes, and then at the top there, you've got bank rate maintained at 5.25%. If you click on that, you can see reasoning behind why they made the decision that they did, and you can also check out the voting history. So a useful source of information if you're interested in the Bank of England base rate. But let's have a look at the numbers. So Bank of England base rate kept on hold for the fifth consecutive time at 5.25%. What's really interesting this time round is the way that the Monetary Policy Committee voted. So as you all know, there are 9 members on the MPC. At the last meeting, 6 members voted to keep rates on hold, 2 members voted to decrease the base rate, and 2 members voted to increase the base rate. This time around, however, there's been a complete change in the mindset. We had 8 members voting to keep rates on hold and 1 member voting to decrease the base rate. This shift in mentality is a real indicator that in the not too distant future, the Bank of England will be reducing rates. None of the members are voting to increase rates anymore, which is fantastic news. It shows that some sort of common sense has been instilled at long last, but they just want to give it a little bit more time to check on the data to make sure that they're not rushing into the decision too quickly. What was really interesting, that this week the Swiss decreased their base rate from 1.75 to 1.5%, although their inflation number is at 1.2%, where ours is at 3.4%, and I will come on to the inflation data shortly. But when the Bank of England are going to make the decision to cut rate is anybody's guess. Under normal circumstances, the Bank of England don't tend to do anything before the Federal Reserve in America, or even in most cases before the European Central Bank. And there were mutterings coming out from America after they held their interest rates this week, and the Fed said that they were expecting to start cutting rates soon and that they were expecting to cut rates 3 times this year. There's also been mutterings that the European Central Bank might actually make a move to lower rates in Europe before America this time round, but there are a lot of expectations that both the Fed, the European Central Bank and the Bank of England might cut rates all at the same time, and that will be at the next meeting in June. Now, there is also talk that when the Bank of England do make cuts, that there will potentially be 4 cuts in the base rate this year. So the thing that stopped them from actually cutting rates this time round was services and core inflation. Both of those numbers are sitting a little bit higher than the Bank of England would like. So I think they're wanting to see some movement there first before they make that first base rate cut. So what do you think of the latest decision? Were you happy with it? Would you have expected that a base rate would have been cut? Or are you expecting that later on this year, the Bank of England are going to increase base rate? I know I've certainly got a few viewers that think a base rate increase is on the cards later this year. But let me know your thoughts in the comments. So following the Bank of England decision yesterday to hold rates, what was really interesting to watch was the swap rate market, and this showed positive signs. So if we take a look on screen at the usual swap rate chart, as you know, we start by looking at the numbers at the top, and you can see that the red arrow pointing down is telling us that rates over the course of the day are lower than they were from the close of business on the night before, which was Wednesday. The downward trajectory continues, as you can see over here. And then if we scroll down a little bit, this rate was updated at 10:30 yesterday evening, and you can see that the 2-year swap rate closed at 4.349%. If you look further down the column, you can see how that compares to previous week. The 5-year rate closed at 3.804, again, down on the previous week. We're still not down to the levels that we saw at the end of December last year, so I'm not expecting to see any significant rate changes from lenders, but swap rates do appear to be on a downward trajectory now, and fingers crossed that continues. So while we're talking about interest rates, why don't we take a look at the lenders that have made rate changes this week? And we'll start with Clydesdale Bank. Selected fixed rates have increased for existing customers, including the professional products and broker exclusive. The Mortgage Works limited company range saw some rate increases. Skipton Building Society are increasing some fixed rates in their 2-year and 5-year fixed rate range. And Nationwide Switcher and additional borrowing product have gone up by around 0.2%. Precise Mortgages, they reduced 2 and 5 year 80% loan to value rates for buy-to-let mortgages, and Generation Home have increased rates this week by up to 0.15%. Atom Bank are increasing their rate, and Suffolk Building Society, they've made a rate reduction of up to 0.2%. NatWest made some rate reductions on most of their fixed rates this week, but a massive increase in their tracker products, which is another indication that potentially they believe that the base rate is going to be coming down, and if more and more people want to go on a tracker product, they're going to start losing margin, hence the reason to make that decision. Virgin, we saw some slight increases on their fixed rates, and the Family Building Society have increased most of their rates. And so while we're talking about rate changes, why don't we have a look at the lender criteria changes? Not a massive amount of news on that this week, but we have seen the Mansfield Building Society make improvements to their adverse credit rating in relation to satisfied and unsatisfied CCJs. And Virgin now accepts 100% of the second job income when you've been in receipt of that for 12 months. They've made improvements to their contractors' contract renewal policy, and they've also made changes to their probation policy. So next, let's take a look at the consumer price inflation data that was also released this week. As always, there will be a link to this article below, but the most important piece of information that came out of this week's data was that inflation rose by 3.4% in the 12 months to February 2024. That's down from 4% in January. Now, these numbers were a little bit better than was expected, and the good news is that because the energy price cap is coming down again in April and possibly again later on in the year, there are huge expectations that we are going to be hitting that 2% inflation rate target very, very soon, which hopefully will be the impetus for the Bank of England to start making those reductions on base rate. Other information to look at: the Consumer Price Index, including owner-occupied housing costs, rose by 3.8%, down from 4.2%. On a monthly basis, CPIH rose by 0.6% in February this year, compared with 1% in February of last year. And on a monthly basis, consumer price inflation rose by 0.6% in February this year, compared with a rise of 1.1% in February of last year. The largest downward contributions to the monthly change this time round came from food, restaurants and cafes, while the largest upward contributions came from housing and household services and motor fuels. Don't know if you've seen or not, but if you've been to the petrol pumps recently, you will have seen the prices went up there. And of course, we are still seeing the impact of higher interest rates filtering through onto the owner-occupied housing costs, where mortgage rates have gone up, and of course, rent has gone up as well. So I do expect owner-occupied inflation to continue to rise a little bit more this year, but hopefully with all the other data moving in the opposite direction, they should hopefully balance themselves out. And like I said, get us to that 2% target sooner rather than later, which would be great news for everybody. Despite the fact that inflation is no longer rising as fast as it was, do you feel like you've got more money in your pocket? I know that there are a huge amount of people out there that are saying the numbers don't match up with the reality. So please do let me know in the comments, how are you finding it on your pockets? Does it feel like inflation is dropping and things are getting cheap? And so the last thing to look at this week is the release of the Land Registry house price data covering the period up to January 2024. As you can see, headline statistics are that the average price of a property in the UK is now just under £282,000. The annual price change was 0.6% negative, but the monthly price change was 0.5% positive. Now, as always, a reminder, Land Registry data is around about 5 months old, so this is looking at numbers from last year. This isn't what's happening on the ground right now. What's happening on the ground right now is seen when we look at the Halifax and Nationwide house price indexes. And as you all know, if you do follow the channel, when we've covered those off, their reports are showing that prices are stabilising and actually potentially on the increase. Now, if we scroll down a little bit, you can see that the Royal Institution of Chartered Surveyors, they did a report in January 2024, and it showed an increase in buyer demand this month. That ties in with what we're seeing from the Halifax and the Nationwide. And as I've said before, what we're experiencing right now is a buyer's market where buyers are in control and sellers are having to reduce price. But with this positive sentiment, the potential that the base rate is going to start to decrease alongside lender rates, that suggests to me that a storm's brewing. The market is going to very quickly shift from a buyer's market to a seller's market, and before you know it, prices of property will start to increase. So if you are interested in buying a property, now might be the right time to do it before prices start to go up. I know that seems counterintuitive because a lot of people are waiting for rates to drop, but the minute that rates start dropping, that sentiment's only going to improve, and then property prices are going to go up. So it's a fine balancing act, but now might be the right time to act. So that brings us to the end of this week's episode. Thanks for watching. As I said back at the beginning, if you'd like to show your support in the channel, it would be hugely appreciated. And you can do that quite simply by giving the video a thumbs up and by subscribing to the channel. If there's anything that you'd like us to cover in future episodes, please do let us know in the comments below, because the aim of this channel is to not only bring you all of the relevant data from the previous week in relation to the mortgage and property market, but also to answer any questions that you might have. So if you do have any, please put them in the comments below. And of course, if you do have any thoughts or feelings on this video, again, please make those comments below. Thanks so much for watching. You take care, have a great weekend, and I'll see you next Friday.